The playbook to build wealth with an average income.
Brent, I am so excited to talk about this because we say that building wealth is available to everyone. And we really do believe that. We really do mean that. And there's a lot of people out there that don't have huge incomes. They don't have the six-figure incomes. And we think that even if that describes you, even if that's where you are right now in your financial journey, it is still possible for you to build meaningful wealth.
So let's reach people where they actually are. If you look at where the median income is per household here in the United States, it's a little under $84,000. Now look, I get it because we used household. So that means for if you're married, that's two people. Yeah, it's going to be tough. And a lot of people are going to be out there telling you can't do it at all. I think you can. It is doable if you have a plan.
Yeah, you have to understand if you want to win the game, you have to describe for yourself what winning looks like. You have to decide, okay, this is what the number looks like for me to be able to live the life that I want to live on my terms and do the things I want to do. And we got to give credit where credit's due. The FIRE community has done a wonderful job of this. Once they know what their objective is, once they've defined what the goal is, what the win is, they're able to really dive in and able to stay sort of laser focused on moving in that direction. But I think the average American hasn't quite figured that out.
Yeah, I remember we did a Making a Millionaire with Danielle, and this is the thing. I loved this idea that she had where she was doing Coast Fire, where we were like, hey, you can do this, where, hey, why don't we show you what you need to save and be hot and heavy with the discipline so that you can, down the road, take your foot off the accelerator and actually make this retirement and this financial plan work.
And what we showed her was like, okay, once the objective was clear, like once we said, okay, this is what you have to do, and if you do this, then you'll end up here, it made it much easier for her to think, okay, I can execute. And the same is true for you in your financial life, whether you're someone with a high income or a low income. But we want to specifically speak to those folks who maybe feel like things are tight right now. Things aren't, there's not a ton of excess sitting around when you think about where your earning power is right now. We want to kind of walk you through what the plan looks like and how you should think about it. And we thought about a little bit of a sports analogy because we think that when it comes to, especially if you have limited resources, the thing that you have to focus on first, and this may be a little bit counterintuitive, is you have to focus on defense. Now, it may not be sexy, it may not be super exciting, but you've heard the expression, defense wins championships. Well, that's true when it comes to your personal finances as well.
Well, the first thing in defense is your emergency reserves, because this is the margin for making those desperate decisions that get you into debt, get you high interest credit cards, and all the other bad things that lead to you being stuck and not getting out of the starting blocks of building wealth.
Yeah, you need to define, okay, what is my emergency fund? Is it 3 months? Is it 6 months? How do I decide? And then how do I get that in place? Because exactly what Brian said, if you don't have that first step in place, it's really easy for you to get derailed. Now, the next thing when it comes to defense, and this is one that we want to make sure, especially at lower incomes, it becomes tempting to try to skirt this one or try to get around. We've seen young people that really like to kind of like to fly naked, not fly naked, swim naked when it comes
skinny dip.
Yeah, they like to skinny dip when it comes to health insurance. But we know that a lot of bankruptcy and a lot of financial failure is due to medical expenses, unknowns coming your way. So we want to make sure that if you have a low income, don't just decide, okay, I'm going to go with the cheapest health insurance possible. I'll have the highest deductible possible, because it does you no service if you have a health insurance plan in place, but it has a $15,000 deductible. There's no way you could even possibly meet that deductible. So make sure that you're not making foolish decisions. Or maybe you're doing it from a noble place. You say, I want to really fund an HSA and I want to take advantage of that. But perhaps HSA is not, the high deductible plan is not the best fit for you. Make sure that you're figuring out how to navigate the health insurance side of your equation.
Well, and then this next one, all right, is having reliable transportation. Because look, I know that looking cool is important, but that's not actually what's going to build your first $1 million.
That's exactly right. We know that cars can be financial napalm. That's why we have rules in place like 23.8 to make sure that you can stay inside the guardrails. And when you think about staying inside the guardrails, one of the single best things you can do, and it does it sound sexy. It doesn't sound super exciting, but especially if you have a lower income or limited resources, you have to figure out how to budget. How do I put together the matrix of where my dollars should go, and how do I stay inside those confines? Because if I don't know where my dollars are going, I can't know if I'm wasting them or if I'm putting them in the right places. And once you put down the budget, and then once you begin tracking your expenses, it becomes a little more clear. Okay, this is where I can cut. This is where I can save. This is where I can triage my financial situation to hopefully get to move into the offensive side.
Well, I mean, the reality is 83% of Americans say they overspend. So if you're not at least keeping track of what's going on, how are you ever going to get ahead and actually own that discipline that creates the margin so that you can actually put that money to work?
And once you've mastered defense, now you can think about the offensive side. What are the things that I can do to now start positively impacting my financial life now that I have sort of the risks and the defensive side covered? And the first thing is, this might be the easiest time ever to figure out how to increase your skill set, whether it be through advances in technology, whether it be through blogs, podcasts, articles, YouTube channels, whatever it may be. There are ways that you can increase your skill set, further your education, and ultimately, hopefully make you more valuable either as an employee or potentially as an entrepreneur.
And then I always try to find the edge. How can you make yourself stand out? And that way you can monetize that expertise and that skill set that Bo just talked about.
And once you've figured out how to monetize that, then we want you to really think through how do I be opportunistic?
That's right.
How do I find the places where I can insert myself to give myself the highest likelihood, highest probability of a positive outcome? And this might mean changing jobs, looking at a different company. It might even mean changing geographies. I need to move to a different city or a different town where there are more opportunities. If you can sort of hone in and figure those things out as you've increased your skill set, figured out where the monetization opportunities are, and then capitalize on those opportunities, it puts you in a position to begin building towards the future.
It lets you keep the business up front and the party in the back, if you know what I mean, too.
That's right.
Together, Bo.
That's
Come
right.
on.
If you can keep the business up front, it allows you to keep your foot on the gas. It allows you to say, okay, I've done the hard parts. I've found the triage. I've created the margin. Now what I'm going to do is I'm going to start devoting myself to doing the right thing and continue to plow forward. And it's amazing that even if you don't have a huge income, if you don't have a ton of margin, a ton of resource, but you have a lot of time, even a little bit can do a whole lot for you. It's why we even talk about, for a 20-year-old, $1 has the ability to turn into $88 by the time that you retire. So if you can start early and stay consistent, even at low incomes, even with little margin, you can still build meaningful wealth over the long term.
So did you cover keep your foot on the gas?
That was what I just said. That was what I was
awesome.
going through.
So guys, now look, if you want, I was hoping, I was like, because look, I was like, how am I going to keep this straight? Is because this was all, I walked in the studio at 9:50.
Yep.
And on our microphones was the mullet, the sunglasses, and the chain.
The mullets are back. Mustaches are back. I think aviators never went out, and I guess gold chains are back. You look pretty hip right now.
What the why? Because you have to know your why. Is the admin team? I think they thought they were going to pick on us because they had this sitting here. Now I picked it up and embraced this. Now I think you honored the fact that you said, Brian, I can't remember if it was a year ago, 2 years ago. You go, we're never doing.
So
costumes
we swore
again.
off costumes.
We swore
forever.
off costumes. They don't help their gimmick. And I was like, all right, let's get in on this
And you
thing.
said, let's dive right in.
So now look, because it is a thumbnail day, which that is the only thing I had to commit to this. So we probably have messed up the hair. So we'll see how this goes.
Can you imagine if we did all of our thumbnails for the next month or so?
Did I screw it up? I mean, did it? Oh, it's still pristine. Okay,
Pristine.
Ken gives me the thumbs
Oh,
up.
I think you should just keep the glasses and the necklace on.
I think so too.
All right, I don't know. Okay, we'll roll with this. This is. I can't grow a mustache, but I can sure wear some glasses.
You can wear some glasses. And I love...
By the way, if y'all didn't know, Bo is growing his stash out. I can't unsee it now that I see it. And y'all know that is a pet peeve.
It's coming. It's summer. Hey, look, it's summertime. It's time
notice.
for bare feet, shirts off, mustaches. That's
By the
what it
way,
is.
y'all should know, there was a whole outfit for Bo, too. He just, too cool for school. he didn't want to embrace it.
It wasn't too cool for school. I just felt like we needed some sort of balance. You know, yin and yang is what we like to. We love to be able to create balance. We like to restore order to the financial chaos in your lives. It's why we like to show up here every single Tuesday at 10 a.m. so we can load you up. We want to answer your questions and speak to the things that you care about. It's why we have the team out in the wings right now collecting your questions. So if you have a question that you want to weigh in on, you want us to weigh in on, you want to get our take on something, you want us to speak to your situation, make sure that you get it in the chat, right now, because we really do believe that there's a better way to do money. Are you stopping? I thought you were going to come in.
I mean, I
No
wanted
glasses
because we're
and
going
necklace.
to turn this into stuff.
I
so
figured we
didn't
were this
wanna-
far in. We should. Ruby, didn't you think?
I thought he might do it. Yeah.
I honestly thought this was like a new you. I thought that maybe
Oh,
this would
man.
be.
It might be a new you with gold chain. Because this thing.
Can't get the chain off.
Okay, I was unaware that you have officially sworn off costumes.
Well, I think it was an unspoken rule. I think
think
especially when I had
we
Bo
veered
in the
away.
Robin outfit and I was
That's
wearing
true.
Batman.
I feel like
think
that really
What's
goes.
funny
I
is-
probably
That's
had
true.
cast the die
I think
that this
we
thing
did.
was dying.
I think we did 12 costume episodes after that one. I'll tell you what, the pandemic was a
done a-
real. It was
Maybe
a real.
it was around 2020.
It was
that
a-
we did
it
cost
was
a
a
lot
real
of costumes.
adventure.
'Cause we had done some before.
Yeah.
Is
And
that
we went through this
magnetized?
phase.
I think that's Why
Look
does
at
that
that.
stick?
That's how you know it's real.
So we have magnets or something over here.
So with that,
Okay.
creative director Ruby,
Questions.
I'm going to throw it.
Yes, no, I have some great questions queued up. Keep dropping them
But
in the
the
live stream
admin
chat.
team did that because April Fool's is tomorrow, and they never let a day early keep them from doing
That's
something
right.
fun.
That's
and
right.
if you knew if
Well,
you
and
come
there
for a
was lot
studio
of-
tour,
There was a lot of talk about mullets last week.
Yeah.
And Brian in a mullet. There were some AI images of Brian in a mullet. So they just wanted to see it in real life.
Did we release the AI Braveheart or the Brian Braveheart? That
yeah.
was awesome. Hey, by the
If you're
way,
on our
if you're
email list, you saw it. If you're in the Moneyverse, you saw it. It's out there.
if you're
I didn't
curious,
see it on Time's cover. Sexiest man alive.
not yet.
Is it? Are we still on?
have
the
they gotten,
are we
back-
on the
have
come
they
on
gotten
that?
back to
Waiting
us
to
yet?
hear
I think
back.
we submitted. Okay, that's right. If you wonder if this is an awesome place to work, it is. These are the kind of shenanigans we do. And if you are someone who's out there looking for a work home, we have a few positions available. Ruby, where can they go to check out our available positions right
Go
now?
to moneyguy.com and click on join the team, I think it says. Shoot, I'm going to just double check I'm telling you the right thing. About and join the team. And we have all kinds of, we really do have all kinds
We
of
do. We
positions
need
listed
advisory,
right now.
we need
have several
administrators, we need
administrative,
editors.
advisory, editor, writer, looking for some high quality, amazing team members who love Money Guy and personal finance. So go check that out if you're looking for a job. Okay, we do have some questions queued up. Let's start with egg, bacon, and cheese
By
K7N.
the way, you know,
starving.
Bo earlier.
Oh, no.
Bo earlier asked for
Did y'all
10
pick-
scrambled eggs. So egg, bacon, and cheese. You have no idea what you're doing to
I'm
Bo right
so
now.
hungry right now.
He
wanted to go
legitimately
massacre
did
an
ask
egg
me
village.
to find him 10 scrambled eggs, but I was working, so I didn't. Sorry. Maybe
Okay,
that was my
we
word.
need to
I
hear
don't
the
know.
question, though.
Okay, the
I'm
question says-
bacon, egg, and cheese.
The question says, "Hi team, what is your advice on taking from retirement accounts to buy a home? I am 40 years old, 104K gross income, single, 450K in retirement accounts. I will be in this home for more than 5 years." So we are starting it off spicy. Should egg, bacon, and cheese take from his retirement accounts to buy a home?
What are our thoughts on taking it? We don't like it.
Yeah.
We know that there are certain provisions and certain rules where you can pull out certain money and be able to use it for that. But retirement accounts are there specifically for a thing, and that thing is your retirement. So if you and I were sitting down having a conversation, one of the questions I'd want to ask you is, okay, what other resources do you have? Is there a way, perhaps we maybe don't pull money out of retirement, but is there a way we could adjust our savings rate? Can we go back in the financial order of, Brian, you hold the thing up for me? Maybe we've been in step 5, step 6, the financial order of operations, but perhaps we want to go back to step 4 so that we could begin building up so that we'd have a down payment so we'd then be able to use those dollars to acquire the home. And then I want to go through all the whys of home ownership. You said you're 40, you got $104,000 income, $450,000 retirement. You said you think you're going to be in the home for 5 years. I want to talk a little bit about that and ask the question, okay, why home ownership? What's the reason behind it? Is it just because this is the next box that you want to check, or is there some other thing that's driving that decision making, I'd want to dive into that.
Well, base it off, come from a public accounting background. You always see T-charts, pros, negatives, and you kind of put the debits and credits in their places. And I start looking at this, and I know what you're thinking. You're like, hey, this is a big pot of money. I want a house. That's a positive, access to capital. But then on the cons column, look, any of this money, especially if it's traditional retirement money, there's some big friction costs to getting this money.
Yep.
Not only do you, now look, a small portion of it you could get access to and not have the 10% early withdrawal, but you're still going to pay income taxes.
That's right.
But then the majority of it, you would even have the 10% penalty if you really want to go, whole hog on this thing and really load it up. And so that's a negative. And so there's a lot of transaction costs to get access to your money. There's a big tax headwind. The other thing is you need this money for retirement. I mean, you're slightly ahead of the curve if you just think about the fact of you do 3 times your income. You're slightly ahead of the curve, but that's actually should be something that creates a win to your back for the future, because that means your army of dollars now are starting to get separation where they compound on top of each other. Because remember that walk towards your first million, you're essentially potentially going to gut it if you start using that money right now. This is when all the magical stuff happens. So that's another negative, is that you actually need this money for financial independence in the future. So I would strongly encourage you to figure out, can you really afford this house, or are you trying to force it by going out there and making your retirement accounts leaky? And I know that we've done a lot of stats and research on the fact that the majority of Americans, this is a trap that they fall into, is that they go and raid their retirement accounts to fund a house, to fund a car, to fund a swimming pool in the backyard. And I'm telling you, don't do it, because your future self will thank you for the discipline. Find another way to get into this house so that you can live your best retirement.
Yeah, and if buying a house is, so you've kind of gone through the checklist and you've answered that, I would encourage you to go to moneyguy.com/resources, play with our home buying calculator, because you've already told us your age, you've already told us your income. You know that when it comes to buying a first home, we subscribe to 3-5-25. You don't have to put 20% down. You don't have to put 3% down, so long as you plan on being in the house for at least 5 years, and the total housing costs don't exceed 25% of your income. So just kind of thinking through this logically, $100,000 income, $25,000 housing cost is kind of where you would be. And so I would use the calculator to back into, based on that number, how much house could I afford and how much down payment do I need to save? And it may not be super difficult to save for that down payment at 3%, depending on the price of the home you're looking, and not having to tap into the retirement accounts to do that.
Well, egg, bacon, and cheese.
Delicious.
Guess what? It's your lucky day because it's Tumbler Day.
Let's go.
Nice.
So since we answered your question here on the show, we would love to send you a tumbler. Just email
Mullets
winner@moneyguy.com.
Oh, man.
Could today
it's
get any
almost
better?
too much for people to handle.
What
And
a-
Bo
This is a good
stashing
day.
it up. Stash it up.
We're coming.
It's a good day. All right. I'm going to move on to the next question, but if you haven't yet and you want to be part of our rapid fire segment, please submit your rapid fire questions into the chat. Just put RF at the beginning and they will be considered for our rapid fire. It does not depend rapid fire segment, where Bo and Brian will answer your questions in 30 seconds or less, and they cannot say.
Can I ask a question?
Sure.
I guess I should raise my hand.
Oh,
Is
like
it
that.
Benson Boone? Why is the stash craze catching on? Because, I mean, go to church Sunday. When your pastor shows up with a stash, you know that we have reached critical mass for maximum stashhood. And I'm just trying to figure out where we go as a society from here.
I didn't notice any particular
I mean, who do I
booming
blame?
mustaches.
Who
Like,
do I
they've
blame
kind
for
of
this?
been
I'm just I know,
around
I'm
for a
old man
while.
on the front porch.
Brian wants to
yelling
write a
at the
letter to
sky.
somebody. He needs to know who to write the letter to.
Yeah.
That's what he's going for.
I mean, do you ladies like stashes?
Oh, is that Miles Teller? Is that Miles Teller from Top
is that
Gun?
Top Gun.
That-
Miles
that's
Teller.
maybe that's what it is.
For the
That's a good
mustache.
call.
Ken,
That was a
dynamite
Maybe
drop.
that is a drop.
And to answer your question, it depends. Your favorite answer. All right, let's move on to a long form question.
she
While
didn't answer the
people,
question.
She's like, we're just going to.
We're gonna move on.
it depends. That's truly my answer, and I stand by it.
Okay, so I don't know if you want his name on air, but your husband, do you like it when he has a stash?
Yes.
Oh,
Boom. You see how definitive that yes was?
Yes.
Okay, let me ask this question. Bo,
my
does your
I
wife
do
like it when you have a
better when he
stash?
Of
has
course.
a beard
Does
and a
your wife
mustache.
really? If she
Yes.
was here, I could ask her.
That's
and
my
she'd
favorite.
like
Yeah,
to
we'll
say.
call her. Let's call her live right now. Hey, Tim, get the phone out. Let's call her.
We're more likely to get a kid to answer the
That's
phone.
right.
All right. Stony13 has a question.
Speaking of, is there a
I'm about to
kid?
say, is that my son?
Don't think he has a YouTube channel. Okay. Hey, money guys. I'm 26 with $60K per year and I'm saving 25%.
Let's go.
I'm swapping jobs soon and was curious how important it is to find a job with an insurance plan that offers a high yield, an HSA, not a high yield savings account, health savings account, if I am already saving 25%. What do you think? We know you love the HSA.
Benefits, in my opinion, are toppings, not the main course.
Exactly. I was sitting there thinking whipped cream and cherries.
That's
Oh,
it,
there
man.
you
It
go.
is.
You were on the
these
same wavelength.
These are the cherries and the whipped cream and the sprinkles. These are not the brownie. Because what you want to do is when you're going to find a job, well, like the brownie's at the bottom, and you put the ice cream on it, and you put whipped cream
Molten
on that.
lava
and then
cake.
We had lunch at the Tucson, or had dinner at the Tucson Emporium down there in
Oh, yeah,
Orlando.
it's good food.
Unbelievable. I cannot recommend the desserts enough. It was I'm getting sidetracked, but this huge Sunday. Anyways, benefits are the accoutrement. They are the sprinkles and that sort of thing. They're not the main thing you want to look for when it comes to a job. When it looks to a job, you want to look for where's somewhere where I fit in culturally, where's somewhere where my skill set will be valued, where's somewhere that I have
Opportunities.
career trajectory, opportunity, vertical movement, those sort of things. And then once you narrow it down to a number of different jobs or positions or things that satisfy those, well, then you can start comparing the benefits. But I would never let the health insurance or the health insurance plan dictate the job that I took, because I think that you're focusing on the wrong thing. If you're doing that, you're kind of majoring in the minors, and I think that there's a chance you could end up in a bad spot focusing on.
Yeah, I mean, if you got two great opportunities, of course you're going to get to the point where you go through the big long-term impacts of this position. But then when you're trying to have at the coin toss moment, yeah, then benefits have a place. But don't let that be the driving factor. Don't let, because we always say don't let the tax tail wag the dog. It's the same thing with, we love health savings accounts, but it is not the driver of your financial success. You need to be thinking, because investing yourself is one of the best things you can do.
And two other things. Don't assume because a company doesn't have a high deductible HSA option that the health insurance benefits are bad. And don't assume that if they do have a high deductible option with an HSA, that's the one you should choose. Oftentimes we steer clients and direct them, don't pick the high deductible plan. Don't take the one with HSA, because the other options might make more sense for you. They're more highly subsidized. They have lower deductibles. There's better benefits. It's a better fit for your family. So don't just assume because we love HSAs, that's always the default answer. It's an option and something that you should investigate, but it's not just if it's there, I'm going to do it.
No, you're good. You know what?
I
Actually, I just got
something
stuck
else.
on.
Okay, he did.
I was sitting here trying to think of a poll we could ask our audience on and I was like, they're both good-looking men. So I was trying to figure out where the cut was, because like Magnum PI and Burt Reynolds,
What?
they are. I
is
was like,
nothing to
who
do
is
with
Bo?
HSA.
Who is Bo? But then I was like, no, I need to find a nerdy mustache person. Ned Flanders. Is Bo more? Just trying to figure this whole thing out.
I thought this was going to be HSA related, and it was.
No, we said,
still
I was
mustache.
already. I'm just. I'm
He had
sitting there
moved
going,
on.
how do I yell at this guy about mustaches a little bit
Well,
more?
before we move on completely, Stony13, if you would like a Money Guy tumbler, just email winner@moneyguy.com.
That's hilarious.
Next question.
Do you think we're in the fourth quarter of mustaches at least? Give me some rays of hope.
I think we're in the renaissance, the rejuvenation of them.
No, but there's a season. Look, you can ask Magnum PI Tom Selleck. He was like, man, when that stash went out of, he's like, oh man, it's a shame that went out of style. But
But did he get rid of it?
I don't think he did he?
I don't think.
You know what I mean?
I don't know
He
for
probably
sure,
didn't get
but
rid of
I've
the
only
4-inch inseam
seen him
shorts
with a
either.
mustache, I think. Interesting.
I'm sorry. I'll bring wine. Maybe I forgot. I took off the gold chain. Let's bring this thing back. Reel it back in, Brian. Reel it back in.
Next question is from Quilt Audit. It says, morning, I'm meeting with someone in my church to talk about finances with her, specifically to help her budget better. What would be the best place to start? What kind of doc should she prepare? What should she bring to this meeting? I was just curious. If you were going to sit down and somebody said, hey, I want help with my personal finances, where would
Only
you
there's
start?
something you go to moneyguy.com/resources and it's an all-terrain, all-weather vehicle to tell you what to do with your next dollar. We've got you covered with the financial order of operations. What would you add to that?
Yeah. So I would say if I was going to sit down with someone from church and I was going to help them out, the starting point that I would want, I'd ask them to prepare a net worth statement. I want to know, hey, a list of all the things that you own and all the stuff that you owe, right? We have a great template. You can go to moneyguy.com/resource. You can download a free one. You can actually email it to her, text it to her. She can then fill that out. Well, what you're going to uncover when she lists out all the things that she owns and all the things that she owes, you're going to see the types of investment accounts she has access to, the types of retirement plans she has access to. You're also going to see the debts that she has. So that's like step number one. I want to know sort of like starting point. Step number two, I would then say, hey, bring me your last month of credit card statements or bank transactions or however you spend money. I want to see where your spending's going. Or maybe you tell her, hey, do a little bit of work. Let's go download a free app. There's a ton out there. You can use Monarch Money. You can use YNAB. You can use any of these. And just start tracking where your dollars are going. And then let's look at it after a month, after you've done it. Because what I want to see is, man, holy cow, you realize that you have 25% of your money every month going towards eating out or towards transportation costs or towards whatever that is. And then I'll begin to triage that. And then once I figured, okay, how much should be going into this bucket and this bucket and this bucket and this bucket, I'd figure that out. So then I'd figure out the margin. Then once I figured out the margin, boom, I'm coming to the financial order of operations. How do I think about where I should be deploying these dollars? Am I getting my employer match? Have I knocked out all the high interest debt? Do I have a fully funded emergency fund? Am I putting money in my Roth? And I would walk it through that sort of 3-step process to get her on solid foundational footing moving forward.
Look, the reality is most people's, because you're going to eat at this lunch. So you're only going to have probably 20, 25 minutes of productive, get it in there. That's why you're going to need to have something that speaks after the lunch. And that's why I love the free download, but also realize the backbone of Millionaire Mission is the financial order of operations. If you ever want to know the origin story, how it all came to be, how you go deep into it. And then this also allows the ground rules to come into play, because even before you get to step one, there's some things that help you set the table of being good with money. So I think that I would use that as something just to kind of a parting gift, so that after the lunch, more action can occur.
Love that.
That's great.
And quack, 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 quack.
You almost took the words out of my mouth. Quill Audit, if you would like a Money Guy tumbler, since we answered your question, just email winner@moneyguy.com. Let's do one more long form question before we move into our
Already
It Does
there?
Not Depend rapid fire segment.
Of course you do.
Did you see the meme of the week? If you're not on our email list,
Did you see the meme of the week,
I
Brian?
did. So one, you should follow us on all the socials. Isn't that right, Matt? We should follow us on all the socials.
Matt rocking a stash too
At
over
Money
there.
Guy
This
Show.
thing, I'm
I
about
know
to be,
it's
I'm
true.
overtaken over here.
But the meme of the week that was on socials and also in our newsletter, and I think it was in our little email this morning, just fantastic. It was a representation of Reby during the rapid fire segment, and it was chef's kiss.
Or was it during the whole live stream?
But
We'll
maybe
let you
it's
be
the
the
whole
judge.
live stream. There we go.
You got it. All right, let's move on to Jim's question. It says, how do I convince my spouse, who is very risk averse, to invest a portion of our cash reserve in the stock market? We have no debt and 2 years of expenses covered by our savings. I max my IRA only.
Look, this is something. When I was writing Millionaire Mission, I was trying to get people to understand what feels safe in the short term can actually be risky in the long term.
That's right.
And what is risky or feels risky in the moment, in the long term, can actually be an incredible wealth building opportunity. And that's exactly what the financial markets are. And you've got it, Jim. You've done the right thing, and that's why I love you use, once again, the financial order of operations will help you, because you'll be able to show your wife, look, we don't have high interest debt. We've got emergency reserves set up. We need to now make this money start working harder than we can with our back, our brain, and our hands, so we don't get beaten down by inflation, so that we can actually grow this money over the long term. And that's what actually starting a Roth IRA and then buying some index funds is going to do. And that's why I would sell the vision of where you want to be, and sell the vision of, hey, don't you want to actually be able to let our money work harder than we can, so we can go do trips, we can do whatever your thing is that y'all love doing as a couple. share that vision so that you can build some collaboration there.
Yeah, I'm curious how old you guys are, because to have 2 years of expenses
That's
saved up in cash is a lot, unless you're like right at retirement or pre-retirement. So I'd want to know that. And I love Brian's idea of starting with the why. Like, what are we saving for? Why are we building? So let's say that you define, hey, we want to be retired one day and we need to save $1 million. I'm just making up a number. I would use math to show my spouse, hey, if we're just going to save in our savings account and this is how much we can save, this is how many months, how many years, how many decades it's going to take us to get to $1 million by just saving in cash. And what you're going to find is, holy cow, we're not going to hit $1 million until we're 75, 85 years old. And then I would show her, hey, do you realize if we started investing these dollars, then we could earn a conservative, let's say 7%, 8% annualized rate of return by investing in low-cost index funds? Do you realize we would then be able to reach that goal 10 years, 20 years, 30 years sooner by doing that? And I would show her that, hey, we have the same goals. Let's talk about the different paths we could take to approach that goal. And then let's agree with one another. What's the most appropriate path? What's the most efficient, most effective path to get there? And I'd see if that kind of clicked and made a light bulb go off.
Do we have on our website, you know, that because we use it on show content all the time, the rolling 20-year periods of investing?
I don't think that's a deliverable.
Okay, that's more of a show topic type thing, but it's one of those magical things is that also a great thing for people who think that investing is risky. And that's why we say don't invest unless you can do it for 5 to 7 years, is because yes, in the short term, there might be some volatility, but if you can stay invested for that 5 to 7 years, there's actually an incredible track record that this is pretty consistent. And that's another thing I talk about in the book is the law of accelerating returns. Mm-hmm. And if you don't think we're living in those terms with how things just seem to be speeding up on innovation and the growth of the world, then you're going to be able to make money off of that. As long as we don't make the robots that kill us, we're going to be able to grow this thing and make even more money off of the ever-expanding economy and pizza pie.
Love that.
Well, that's great.
But look, and it doesn't matter if the robots kill us at that point.
Oh, that's
because
not
that's
great.
what you know what I mean. You can't control that. That's outside of the control feature. There's no plan
really
for that.
That really doesn't matter to the
You
question.
know,
but
that's for the government. That's for other people who should be thinking about those things, not you.
Jim, you
to
don't
be
have to
using
think
the
about the
financial order
robots
operation.
taking over the world,
Look,
but
Jim,
you can
don't
think
worry about
about what
those
Brian and Bo
robots.
shared while you email winner@moneyguy.com to cash in on your Tumblr if you would like one. All right, it's Brian and Bo's favorite part of the show.
I was
does
about to
not
try to delay
depend.
us by going on a tangent, but let's go ahead and do this.
It does not depend rapid fire segment where they will answer.
Did awful last week. I just want to say
Yeah.
I did very poorly
You
last
did.
week. I've thought about it all week. I could barely focus on the.
Okay. Oh, the sunglasses are going back on.
This is a job
He
for the
means
Maverick.
business.
Let's
Look,
get
here
in
we
there and
go.
do
That's
this
right.
thing.
So just a refresher on the
the
rules.
Maverick.
Goose, are we ready?
Brian and Bo will have 30 seconds combined to answer the question, and they cannot use the words "it depends." And I will be trying to listen. Don't get too cute with it. Don't say other phrases that mean "it depends." Okay, I will flag that.
I feel like that was
now.
funny to me.
I'll throw him a bone at the end, and we
You
will
are a
have our
master
maybe it
communicator.
does depend segment where they can say all the
notes
things they
today.
didn't get to say in the 30 seconds. So with that, let's dive into question number 1. 30 seconds on the clock. When it comes to 401k max out step, should we opt to max out Roth or traditional or a mix of both? Don't say it.
Majority of people, you're going to be Roth IRA. I mean, I got to think that just time, if you maximize the value of time and young people, I love Roth because, you know, most employers now offer Roth. I think that's where a large portion of the population would do really well.
Agree to disagree. By the time you're maxing out, you're putting $24,500 into your salary deferral. If you're able to save that much money, you're likely going to be higher income, which is likely going to put you in a higher tax rate, which means that you're probably going to max out on the pre-tax side.
You ain't wrong.
We got to disagree, and time is up. All right, question 2. Why do you never mention public transit as a possible form of reliable transportation?
'Cause we're two
there
Southern
are a lot
boys.
of there are a lot of places where it is possible.
I know. Whenever I go
with
to
a lot
Europe
less-
or, you know, even DC or New York, I'm like, this is awesome, especially with the way the mobile apps make it work.
we have to start the clock. So
Oh.
this would be a lot less expensive than 8% of total income. Start the clock.
Agreed. We public transportation or like a walking community is an amazing opportunity for folks who can live in that place. Neither one of us have ever lived in a place like that, so it doesn't come to mind initially. That's just a little personal bias that we have.
Yeah, I mean, I grew up when they built Fulton County Stadium, and then even the TED later. They didn't have MARTA go to it. So, I mean, we're from the Georgia. We don't. Public transportation was never done well, so it's not part of our life.
You know where public transportation was done? The question's over. I get that. You know where they mastered public transportation really, really well? When we were in college at the University of Georgia, right? Like that.
Wow.
That was the.
I was part of that infrastructure.
I know you were one of the bus drivers.
I was one of the bus drivers.
But it was great. It was amazing how convenient it was to hop on a bus, get wherever you needed on campus. You knew the schedule. If I lived in a city where that was like an opportunity, that was a thing, that'd be fantastic.
If I could make $1 gazillion driving a bus, I might still be driving a bus. Listen to the Beastie Boys.
All right.
It was good
Way
stuff.
to buck the system there, Bo. Let's get back to our 30 seconds.
That was a tangent. I was a tangent.
Next question is, what is the money topic Bo and Brian differ on the most, and who's right?
Well, I mean, paying off debt. I mean, that's what we fought on it for a long time. Made it in the book because Bo kept telling me I was bad with money or math because I was trying to pay off my low interest mortgage.
And I was right. What's really
That was
interesting
part of
is
the question.
we actually do align on, I would say, almost 100% of things financially, because it's not like there's a lot of it's fairly black and white, cut and dry. There's not like a ton to disagree on.
Which question was that? So put a number.
3.
3.
I'm making some notes too.
Just when we come
time's
back,
up.
He's making notes on
when
things
we
to
come back
disagree
to
with.
that, I do want to say 2008.
Okay.
Oh.
Next question says, if I retire before age 55, should I do 72T or a Roth ladder?
Say it again.
If I retire before 55, should I do 72T or a Roth ladder?
I don't like Roth ladders. Gosh, I want to say more, but 72T is complicated, but Roth is going to be your favorite savings. It's going to be your favorite child, so it's going to be the first in, last out.
Nope. Okay, we'll come back to it.
72T.
When the market is going
We
down
still have
sharply.
time.
I'm so sorry.
We still have
When
time.
the market is going down sharply, what are some financial mutant actions to take?
Always be buying.
Yeah, I mean,
Get
always be
excited.
buying. If your dollar cost averaging because you have a lump sum, you can once you get over 20%, every 5% drop, you can accelerate another month forward on your plan.
Well done.
Look for opportunities.
Yeah, I try to be opportunistic.
Great.
We still had time. Look,
Yeah, you cut us off. We had 15 seconds.
You took the timer
Production
away.
thought
Hey,
you
we're
were done.
master communicators. Well, I put myself in there with master communicator Bo.
All right, next one is the real hard-hitting question. Comb or brush?
I use both.
Neither.
Ooh.
Are you?
both of
I'm
you.
You
like,
use fingers?
yeah, dude. I just mess it up.
No, I use a comb to part the hair, get the right part because I'm not an animal, and then after I dry the hair, I got to run a brush through it to give it the poof.
You know what? Or do y'all use utensils or your fingers and hands, right?
We're getting quite the variety of answers from
Wow.
your fellow men.
Are
here
you a
in the
comb or
room.
brush or are you fingers?
Neither.
Oh, I was going to say neither. He just wakes up and just shakes a little bit. Yeah, no, I just, wet the hair real quick, tussle it, put some, by the way, a Money Guy listener is the one who hooked me up with my hair stuff. Pull a little bit out of there.
Wait, a Money Guy listeners who hooked you up?
Yeah, man.
Somebody sends you product or something?
It's
we
the best
went
product.
way
I've-
over
it's the
on
best
that one.
product
Yeah,
I've
and
you're
I
paying
am
them
slacking.
dividends. So
best product I've ever used.
Let's
for my
move
hair.
on to the next question. What should I do first? Pay down my mortgage at 3.25%, $29,000, or my student loan at 6.1%, which is $444,000.
Student loan.
Yeah, student loan. One is, especially how old is this person?
Doesn't matter. Student loan.
I mean, that one sounds easy. Let's do the student loan.
Did you say 29,000 on the mortgage?
Yeah.
That's what it appears, yes.
So there's a debt snowball thing going here.
Right.
They're thinking, ooh, I'll pay
You
off the
could just, like,
lower
get that
one.
one
I'll get that
done
out. And
quick.
I think it's going to be suboptimal, especially when your interest rate on the student loans is twice as high as your mortgage, and the mortgage is appreciating, and it's super low interest, almost as low as the risk-free rate. For sure, student loan.
Yeah, I agree.
Next question, which step of the food would you place paying back a 401k loan that you took out before you were financially enlightened?
Yeah, I mean it's probably that's more of it depends on the interest rate. I don't need to know more detail.
Oh. All right, you both lose the time. Thank
why
you,
do
Caleb.
I lose it? I didn't say it depends.
You
why
were
do I
a
lose
team.
it?
You were a team.
I didn't say it
Moving
depends.
on.
Last time I got called for depends, he got the answer.
I give Bo credit. He held up to 3. I was thinking 3 and 9. So
all right, next question. How do you know when it is the right time to tax loss harvest?
When you have losses inside your taxable account.
Yeah.
Is that it? Short and sweet?
Yeah, I mean tax law, yeah. As soon as the market starts find the silver lining.
Sometimes you might have a position that you really like that you don't want to get rid of. I have this individual stock, it goes down, I still believe in the stock. I don't want to sell it, potentially miss out on the 30-day window. So I'm not going to loss harvest that. But indices that are easily replaceable.
Good call.
When you got some losses.
Somebody put justice for Bo in the chat.
Right? Remy is, jeez. Whew.
All right. A couple more. Best strategy for handling mileage reimbursement. The rate is generous and we always have extra.
On taxes or like from the employer?
I think from the employer.
Yeah, it's from the employer.
Best strategy on handling it? Track
I mean,
your
I'm sure
mileage?
there's apps that are out there
Said
doing
he always
that
has extra.
for you.
Always has extra what?
Money.
Track your mileage and report it and get your expense
I mean,
reimbursement.
automate the process.
I don't understand the question.
I mean, there's apps out there that will help you automate
I just
so
wanted
you
to
can
know
make
what
sure
you
you
were
get
gonna
every
say.
mileage that you're entitled to.
Great. Last but not least, what really went through your head when you walked in and saw the mullet wigs on your desk this morning?
I was like, what crazy thing are they trying to do? Especially when I saw the mustache for Bo. But then when I found out the admin team did it and April's full, I was like, yeah, come on, let's get in.
I thought it was our writing team that did it, and when I found out it was the admin team, I was like, "Oh, okay, that's on brand." I couldn't figure out the angle that the writing team was going with, or where we were.
I mean, let's face it; they're sitting on bouncy balls right now outside that door.
Our admin
So
team.
they're not serious. They're not serious people.
Our admin team is sitting on bouncy balls right now.
They're not
That's what they
serious
do.
people.
Health is wealth.
They're not serious people. Hey, by the way, we desperately
listening right now.
we desperately need a new administrator. So if
We
you'd
do.
love to be an administrator for a financial
Hope you have
advisor
some
firm and
core strength, though.
and you like building your core strength at work on a big bouncy ball, go to moneyguy.com.
I like that you've committed to buying another one for the office.
That's
Oh,
right.
I'm sure. That's the other thing. I know this is not part of the 30 second. You know, these are corporate credit cards that are buying this
yeah,
stuff. We
for
are
sure.
totally stretching the deductibility of all things when I see mullet wigs. Fake
One of our
gold
admins
chains,
just
and-
messaged and said, "Let us live." So that's your message from them. All right. That finishes our It Does Not Depend rapid fire segment. So now we will move on to our Maybe It Does Depend segment where you can say what you didn't get to say. On the very first question about 401k, you guys disagreed. Do you have
Yeah.
anything else to say on that?
No, I
Bo
think
was fighting to not say it.
yeah. So I said that if you're at a higher income, to be able to max out your step 6, that means that you've already maxed out step 5. That means you're putting 7,500 in a Roth, 7,500 in a Roth, either 4,000 or 8,550 or whatever the numbers are in your HSA. And now you're doing 20. I think we did the math when we did a Manny case study. You have to be making $137,000 as a household for 25% to have you maxing out all those. So the odds are you're going to be in a higher income situation, which is likely going to justify you doing pre-tax if you're maxing it out.
So my logic train was that only the top 10% are going to be able to be in that situation. The 90% are, probably benefit from doing a Roth. So I went with the numbers because the real answer is Bo's answer, which is it depends. But I was like 90-10. Let's go with the 90.
I knew there was going to be a lot to say there. There was...
But I am saying Bo is right. I know he loves hearing that.
It's my favorite thing to hear.
As a master communicator. But it is the 90-10. I was just trying to play the numbers.
Oh, I was curious, for public transportation, what percentage of even like the United States has that? That's what I was wondering
That's a
too. Because I
great
do
question.
think that I was under the impression
Yeah, I think more
that
governments
generally
have done
speaking,
things like, because let's
that's
face
not
it,
an option for a
public
number of
transportation had to be something that was really thought about in like the 1800s.
people. Sure.
because now land and everything is so expensive.
hard,
if you
yeah.
try to go put this stuff in, like cities now, goodness gracious.
really
I
difficult,
mean,
yeah.
there's projects out there in California and others that have shown that it's a disaster to do it now. So these are decisions that you wish people would have made back when land was
Because I was
cheap.
just thinking about why do we not talk about it more? And I think you're not wrong that there is some personal bias there, right? Like we've always lived in
Well,
places
but I
countries
do
where it's
give-
not.
look,
But I think that's
It's a
pretty
most
common,
people,
right?
yeah,
I
most
think
people.
it is a
In Millionaire
majority.
Mission, I do talk about like on housing. That I think people who live in high cost of living areas, one of the hacks that you can break the housing rule of 25% is when you have public transportation and you don't have a car payment. There are ways.
You
So
could have some
I
wiggle
try
room,
to
yeah.
address it when I can talk in a format that's not, especially not 30 seconds.
Right. But it is awesome. I was just in New York City not too long ago, and it is crazy how like you think you're going to get a ride share, and then you're like, why would I do that? That would take way longer.
Well, and remember,
Like,
we went
it's
to New
awesome.
York.
I
Remember when we
know.
went to New York and we gave Bo the New York treatment?
We did.
Yeah.
And we were like, hey, we can Uber and it would take 45 minutes to get everywhere, or we can pull out our cool apps
Yeah.
and just ride
Yeah,
the
that's what
public
we did.
It was
transportation.
great. So maybe we should talk about it more, but
Quick Google search,
Not everyone
approximately
has it.
55% of Americans have access to public transportation, while
Really?
45% have no access
Yeah,
at all.
but that stat, you have to be careful of stats because just like we just talked about, City of Atlanta has public transportation.
But it's not
It
effective.
doesn't go anywhere.
Yeah.
And it's just like around here, we have shuttles
because I
riding
guess in my
everywhere.
mind, I'm thinking
But-
New York City
So
subway.
those stats would say you have, but you don't really have public transportation.
Right.
You've got the government trying to
Interesting.
wink and nod that, hey, we got a bus out there. No, it doesn't. That's not really. Nobody rides that.
Number 3, you said 2008. It was what do the guys differ? I think I know where you're going with this.
Yeah, well, I think when Bo and I first started working together, because look, we all have a recency bias, and since Bo graduated when the market was literally getting its
In the
teeth
Great
kicked
Recession.
in, I think that you, for the first few years that you were managing money, or you had some nervousness. to
Super
it.
conservative
You're super
allocations.
conservative.
Thought the
And
market always lost
And I was
40%.
trying, and at that point I was like, it's okay. And I think you probably thought I was a cowboy, and I think we've now moderated where we're the same. Even though I'm getting older and probably more conservative, it's just one of those. We all are shaped by what we've lived through.
Yep, that's right. The other one that I wanted to add just to, there was a question around, hey, for fire, should I do 72T? For those of you that aren't familiar, 72T is a way that you can access pre-tax assets prior to 59 and a half. You have to take substantially equal periodic payments, but there are some rules associated with it. You got to make sure you do it right. You can't run afoul. Or should I do a Roth conversion ladder where I convert to Roth, let it sit for a while, then I'm able to pull the basis out? We both ended up saying, hey, likely you want your Roth dollars to stay in the Roth accounts as long as possible, so you're maximizing the tax-free growth for as long as you can, because that's the real benefit to Roth. So if you're giving us a binary option between conversion ladder or 72T, we're probably going to say 72T. However, we don't really love 72T either. We'd rather see you plan for it, build an after-tax account, or maybe have access. A lot of people don't realize if you are working at an employer and maybe you have this big IRA rollover over here from previous employers and you're planning on retiring at 55, you can always roll pre-tax assets into your current employer's 401k before you retire, thus opening your ability to access those assets from 55 to 59 and a half. So there are other ways to get access to those dollars that aren't quite as complicated. We'd love you to do one of those as opposed to either one of the Roth conversion or 72T.
Yeah, and I'm not against Roth ladders. It's just, but when I've seen it, people come to us and they tell me, hey, I've built up this big Roth so I can do a Roth ladder and pull that basis out. The reality is then we look at all of your accounts and we look at what your tax rates and other things, and we're like, yeah, I mean, I know that looks good on paper and it's a cool content piece, but you realize that money grows tax-free. Mm-hmm. If you die with that money, it gets to continue to grow tax-free, and you're not going to die broke. I've seen how much money you have built up. And it's just in practice when I look at people's actual assets and I'm trying to create a real plan that's, because personal finance is personal, mm-hmm. Usually we don't go start rating the Roth account first.
That's
it's
right.
Not usually. It's usually first in because it's step number 5 of the financial order of operations, last out because it is your favorite child when it comes to your assets, because that's one. Even Bo, like right now, you pulled me inside and go, hey, I know your income's tax rate's high, Well, what are you doing? You ought to be doing Roth contributions even to your, because I'm
There's a
now
number
in
of
this
reasons
legacy
why it makes sense
standpoint.
for you. Yeah.
And you're right. I mean, that's why I keep thinking about, I'd rather pay a little bit more tax to this so that my, daughter who's going to be living off this stuff. Because that's the other thing is I have an autistic daughter who, you break the 10-year rule on spreading beneficiaries out. If you have somebody who's developmentally challenged like my daughter is, she's going to be able to basically stretch this out over her lifetime, which is pretty incredible. Yes, I'm going to pay more taxes now, but creating an alternative stream for her is pretty powerful stuff.
It's a good planning, isn't it?
It is good planning.
There was one question where
I have it.
Brian said it depends, and somehow you, as just a dictator, decided,
Matumbo.
this is the way the game works now. Somehow y'all are both disqualified if Brian
And you
says
lost
it depends.
points.
And I lost
She wouldn't do
points.
that to me. That's where I know I'm still Reeby's favorite.
So my question is, what was that question? Because I feel like I might have had something to say
You
there.
did. It was which step of the foo would you place paying back a 401k loan
Oh, this
that you
is so
took
easy.
out
It's-
before you were financially enlightened?
Okay, why do we dislike high interest debt? Because the high interest rate works against you aggressively, and we want your money to work for you, not against you. I would argue that a 401k loan, irrespective of the interest rate, irrespective of the fact that you're quote unquote paying yourself interest, you have taken valuable soldiers in your army of dollar bills off of the battlefield. So I would argue, let's get that 401k loan paid off as though it were step 3. So I want you to knock that out, get that paid off, let your dollars start working for you, and then begin progressing through the financial order of operations. That's what I would have said had Reeby been kinder and more equitable. But she
I
wasn't.
will try again next time.
By the way, we had some great brainstorms. Reeby walked out of the room, so it probably won't get implemented.
Oh my gosh. Shall
But
we
we
say
are
'em?
dropping some dimes in the content meeting. If they fill you in,
Did they
can
tell you
never
already?
walk
we
out
got
of
some
a room
great
again.
ideas. It's going to make the rapid
always a
fire. Now, it
mistake.
terrifies me because I'm naturally not good at this already. But if we can implement this, you guys are going to absolutely love what we add to this. If Reeby signs off on it, that's
Did
that's a
y'all
big
tell her
yes.
the idea?
It's good stuff.
They're too
Reeby
smart
walks
for
out of the
that.
room and it's like, ooh, boss has left. We get to
I'm
play.
flattered, I think. I think I'll go with flattered. All right. We do have some time left, so let's get back to some long-form personal finance. Are you ready?
Oh, let's do it.
All right. The Winkinator 21 asks, hi, money guy. Where would an ESSP, or does he mean ESPP, fall into the foo? Or are those two different things? You
I'm
can
thinking
tell.
ESPP
It's
is what it meant.
employee stock purchase plan.
Yes,
I
that's
think
what
it's
I was
the
assuming he meant. So where would that fall into the foo? I am putting 15% of my take home into the program, which means I can't max out my retirement.
It depends. I can say that
Yeah.
now.
You can say it. I know. I
this
bristled
is
when you
one
said it. I
that's
was
important.
like, okay.
It depends on
But it
how
does
your
depend.
how your plan operates. For those of you that aren't familiar, ESPP is an employee stock purchase plan where your employer says, "Hey, we want you to participate in being an owner of this company, so we're going to allow you to buy shares in our company." Now, here's where it matters how the plan is structured. Oftentimes, what they'll do, especially if it's a publicly traded company, is they'll say, "Hey, we're actually going to let you buy at a discount. If you want to participate in ESPP, we're going to let you buy at a 15% discount. Or we're going to look at a trading window from day 1 of the quarter to day 90 of the quarter, and you get the lowest price in that window," or whatever that is. If something like that is happening inside of your ESPP plan, we would argue that's a lot like free money. Like if I get a 15% discount, or if I get to buy at a lower price than market, that's my employer providing an opportunity for me to have some free money. And so we want you to take advantage of that aggressively.
But we love these employee stock purchase plans because it really is that good that you get a discount, and then a lot of times they'll let you buy at the lower of the price at the beginning or the end of the quarter. That's why you got to get in and get there and get that. But here's the asterisk that goes at the end of that. You have your human capital. This will be part of your investment capital. You need those things to kind of decouple at some point because you're trying to build financial independence outside of your human capital. And if you have all your eggs in one basket, it can be great or it can be disastrous. And part of what we're trying to help you build is something that protects you, whether it's raining outside, whether it's cold outside, whether it's sunny outside. We want you to have an all-terrain plan. So that's why we love these type of opportunities, but we always say there are limits, or create a system to where this is cleansing itself out, to where you maybe every year you automatically are then flipping it in to sell it and turn it into diversified holdings that can start building your army of dollars outside of the company you work for, because it's just a risky thing. Y'all have heard me tell the story of Lucent Technologies and other things. When I worked in Atlanta, I saw a lot of people that on paper were worth a lot of money, and it pretty much went to nothing because they had their human capital and their investment capital sitting in the exact same place.
Love that.
Love that. Well, hey, if you don't want to stop chatting, don't want to stop thinking about personal finance, even when we turn the cameras off today, no problem. Just go to moneyguy.com. Not only do we have tons of free resources and calculators that go deeper on some of the topics we've talked about today, we also can send you to the Moneyverse, our private Discord server where you can keep chatting with each other, asking questions, giving input and perspective and experiences. And we even just posted a poll up there about your savings rate today, so you can compare notes with other mutants and talk about your goals. So if you want to do that, go to moneyguy.com/moneyverse. All of that is on moneyguy.com. We're trying to make it better and better, more searchable for you every single day. So be sure to check it out if you haven't yet.
Now, look, if you stuck around, because I think that we at least give Bo the opportunity, you've hung out with the wizard. What was your favorite ride?
Yeah.
What was your favorite ride at Universal?
You know what I saw? So I took my wife and I took our oldest girls down to Universal down in Orlando. Yep, and it was unbelievable. So much fun. The girls are big. We were at all the roller coasters. I got to see I saw a bunch of you in the Nashville airport, saw a number of you in the Orlando airport, saw some of you at the parks. Thank you so much for saying hello. It was wonderful to get to meet you, wonderful for you to say that you watched the show, so thank you for that. It was awesome. I think the easy answer to your question is Hagrid's is just ballin'. It's an unbelievable ride, right? Like, it's so good. But also, big fan favorites, Velocicoaster was a big fan favorite, and Hulk was a big fan favorite. So all my kids crushed them all, right?
And the real question that everybody wants to know, did you check a bag, or did you gate check a bag, or did you do carry-on?
So here's what we did. Going down at being in the Nashville airport, I had 4 carry-ons, my kids and I, so we took all carry-ons. We volunteered to gate check at the first notice. And it was we gave them the bags, we went and sat down. It was so easy. We'd land in Orlando, we'd take it to... And just, you know what? The Lord was smiling down on me. As soon as I walked to the carousel, all 3 of my bags, 3 of the 4 were just in order. And I just pulled them right off.
So somehow you got to baggage claim. Y'all are so slow off that plane that it was already
I got a bunch of kids, dude. And it was literally so easy. And the way back, it was not a full flight. So we just carried them on, and it was great.
That's a financial mutant hack.
Really?
It
is. You know what? Because I think Southwest now charges $35.
Delta and all of them charge. It is a hack. If you want to check your bag, gate checking is probably the cheapest way to do it. It's amazing. It's the same way with like your parents living in the basement. You want it to be a choice. You don't want it to be mandated. I mean, don't you? It's the reality of the situation. I love gate checking if you want to use it as a financial mutant hack.
Sure.
I don't like when the airlines tell me, hey, you, sir, you're now at this point in the line. We're going to take your bag, even though you like to SEAL Team 6, get off the plane and run to the cars as fast as you possibly can. You know, I like it when Bo can, at his leisurely pace, get off the plane. But I want my family to attack and go and get the heck out of there as fast as possible and not have the airline hold me back.
I will tell you, when we got on the plane, because they were like, so we volunteered at the first call. Hey, if anybody wants to gate check, I was like, we do. So I did. And then they did like 3 or 4 more calls. We got on the plane. So much overhead space. I even sent you a picture. I sent you a picture.
No, it was empty.
It was completely empty, Ben. So I do think they're...
Yeah. Pants on fire, airlines. We've caught on. I don't know why. I haven't figured out their game completely unless it's speeding up the process. But those overheads are not really full. They are fibbing to us, and we've got to work on that. But I couldn't help myself. I wanted to know about Universal. I wanted to know about the gate check because that was something that just populated a lot of our live stream last week, how I got my... Because I saw some Money Guy folks on the plane, but unfortunately, they were right as I was trying to Karen out on the
They
on
got
the
gate check
flight
Brian.
attendant. So is what it is. I'm your host, Brian, joined by Mr. Bo. We'll see you next week, Money Guy.